The Hedgeless Horseman here. It's September 2nd, 2025. First of all, thanks to my sponsors. As always, considers me extra biased while talking about any of these. Look at gold. Gold is broken out of the Bart haircut kind of pattern and is making new all-time highs. Well, I thought I would try to maybe highlight how extremely interesting I find our current situation to be, and also why as I've said for quite some time now, especially in 2024, that the sector was so doubted, so hated. I know quite a few people who basically threw in the towel last year. Some people threw it out in 2023. And I don't expect those people to, come back. I don't think, when you're enough disgusted with a sector, you don't really want to get back. Especially, you don't want to be selling low and then get into it again, because it just feels like you missed out on so many games. You know the feeling. I mean, that happens in regular stocks as well. If you sold something, then it went higher, then you don't feel like buying in because you feel like a dumbass. So we can safely assume that a lot of people got washed out last couple of years, and it was only really, just a few months ago actually the sentiment was kind of poor as well in the the real juniors, let's say. Gold majors, Lundin Gold, Agnico Eagle, yada yada, they've been doing quite well, but I would just so they've been doing quite well. Obviously easier to hold something that's you don't feel like you're gonna puke every single day. But yes, so a lot of people got washed out, and I remember I've been I've spent years basically just keep buying, the lower this sector went. And of course, you see quite a bit of trolling and people who say, well, it's different this time, crypto is the new stuff, yada yada yada. So you have to stick to your guns. I stuck to my conviction. I was 100%, let's say 99% sure that this would not be different this time, and this sector always does this, always crashes, always goes up. We even saw for a while there, some billionaires start to doubt if this sector is ever going to come back, and I just stuck to my guns, looking stupid for 2021, 2022, 2023. We're talking years of a declining market sentiment, and overall, the average junior basically going down 70-80%. So it wasn't pretty, but I kept buying, and as you probably know, I urge people to keep buying what is cheap, because this is going to turn around. And when the masses get in, you'll be up already quite a bit. That if you look back, it's like, okay, what's the 4-year return? It's like it's going to be well worth it. When it turns, it's going to be well worth it, even though you might be down 50%. And you know me, I've said a bunch of times, a 50% decline is nothing in this sector. If you're down 50% on average in your junior portfolio at a bottom, that's absolutely nothing. 70% probably not a problem either. Problem is that most people don't understand that, and they rather sell out at minus 70% and think that they're going to make it back in some other sector that, quote, works. So they end up shaving off 70% of their portfolio, find something else that's high in sentiment to buy, and then they do the same thing and really never make any money. And most people shouldn't be active investors, and vast majority should not be investing in junior miners, because it's gonna break people's minds. It's like a war of attrition. I would never really advise anyone to get into junior miners. Most people I don't think they're wired for it. You can't stomach the volatility, can't stomach how many landmines there are, yada yada yada. And most people can't stick to the simple truth that this sector is always going to go down and then always going to go up. You can make, I've said this before, and I remember I said that at the Colorado School of Mines, a trained monkey could beat this market. But it's very human to sell low. If you put a trained monkey to start buying GDX or whatever, mining index, not even, quote, high risk, anytime it's down 50%, then just keep buying every month, every day, if you can, sooner or later you're going to be green. So in one sense, it's probably one of the simplest sectors, and even Pierre Lassonde said that it's the simplest sector in the world, the gold sector, because it always crashes and always rallies. Problem is that we as humans can't really cope with that simplicity. We certainly we don't see it that way if our returns are bad for months or even years. We just can't come up with a scenario where we're actually doing something that makes sense. It breaks people. Most people don't have the fortitude to believe that they are right in doing the right thing when the market in your portfolio is telling you something differently for months and years. So you really have to have conviction, confidence, believe in yourself, yada yada yada. Because also, vast majority don't know this. I mean, most of the pundits and gurus, they don't know this either. I mean, not to necessarily crap on people, but I've said it before. If you find me writing, no, I shouldn't say it. Anyway, let's just suffice it to say that this sector is extremely easy and extremely hard at the same time. It's the emotions that makes it extremely hard. But let's look at where we are. It's like this is, I think, as I've said before, that the sentiment was so horrible and nobody ever believed that juniors could go up, and that I thought that I think we're going to have a massive bull market. I think the next bull market is going to be bigger than anybody can, including myself, can even dream of, let's say. And that was kind of is a result of just how bad sentiment it is while we're reaching, let's say, peak copper, and I think we've hit peak gold production, yada yada yada. Permit timelines get extended. There's no capex, so it's like we're underinvesting while demand is growing, and nobody cares about these juniors. So it's like the fundamental supply-demand picture was getting better and better as the share prices kept going lower and lower. So it's like that's a recipe to have a big bull market after the bear market is done. So that's what I kept in mind. It's like, no, I'm 99% sure we're gonna have a bull market, and it might be a big one. And we're gonna look at some stuff that I think paints on a remarkable picture. So yeah, here, hard to put into words how exciting this big picture, decade-long charts. I think we're just about to begin the traditional bull phase. I mean, we're already up, obviously, from the lows of 2024. So it's not a matter of if we've had a bull leg at least, but if we're talking bull market, let's say, multi years. I mean, 2016 was the most epic rally I've been in, but that was only 8 months. So a lot of people say that was a bull or a rally in a bear market rally. And the juniors went basically down to the same level 2024. So I guess in a sense that was true, even though the majors never really got to that exact low. But let's look here, for example. So this is S&P 500 to commodity index ratio hits record high August 2025. So financial assets still seems to be like a record demanded compared to commodities. And obviously the irony is that every single S&P 500 company, all of them, regardless if they're a service company or whatever, the commodities is the lowest common denominator. Every single S&P 500 company is consuming metals and commodities. So you can't have a never-ending bull market, for example. You can't even have a steady state, S&P 500 without, commodities being consumed every year. So it's like, yeah, it just goes without saying, I guess, that the better the companies do in a sense. I mean, the more commodities they're probably needing. And it's like copper consumption is going up every year and has been for, I don't know, 200 years, for example. And here we see some interesting stuff. I mean, here's the dot-com bubble when, Nasdaq hit whatever it hit, 4,000. And gold hit a low of, what was it, $250 or something. So that's when this peaked, where basically the FOMO and demand for financial assets, and in that case, dot-com companies, compared to, I mean, crypto companies today, or cryptos, hit a peak here. And then this ratio went down up until around 2011. And this is where gold peaked. So all of a sudden, this stock, and this was global financial crisis. So the stock market, the risk-on trades, the financials, whatever, they get blown out, and gold had gone higher in, I guess, somewhat response to that. So all of a sudden, stocks were cheap, and gold had gone up a lot in price. Okay, well, that turned around, and since then we basically had a bear market in juniors up until this day. But now it's even higher, tech boom. So it's like after this peaked, we had a 11-year bull market in gold miners, and this is still at all-time high, even with gold miners having, gold being up and gold miners having done pretty well. I guess it's copper, that's, well, it's near all-time highs, etc. But that's what makes it, in my opinion, exciting. That copper is around all-time highs, silver is, around 40, not too far off from all-time highs. Gold is making new all-time highs. And still it seems that the stock market, because I've seen people say it's the US stock market is the most overvalued ever. So it's like, that's the interesting thing, that yes, commodities have gone up, but stocks have gone up so much that the ratio apparently hit a new all-time high. So imagine when that mean reversion happens. It's gonna be, could be quite interesting, especially if we're gonna have AI and I'm trying to come up with, well, more electricity at least, and let's say in India industrializing, etc. So I mean, when I see headlines today, for example, about so and so bank or whatever says the Nasdaq or S&P can go up 20% more this year from AI boom or whatever. I mean, it's just okay. I mean, that's probably what a lot of people like. When sentiment is high, people are looking for excuses to buy, right? If there's a low risk that something can go higher, they take it. Whereas at bear market bottoms, it's if there's any sort of risk, no matter how low the company's price, people are selling, because nobody can stand a single risk to the downside, even though like everything is priced in. The opposite is that sentiment highs, obviously, or high sentiment, late stage bull phases, where it's like if you own something, you made money on it, and it's gone up a lot, and you obviously want, in your mind, you want this gravy train to keep going. If you made 100% over the last 6 months in Nvidia, for example, you want it to keep going. You want to, take water from the, same fountain. That's why I've talked about this before, why a lot of, I think, crypto guys, they're one-trick ponies. They've never been good at investing, never made anything in investing, but some people made a lot of money in crypto or by hodling Bitcoin. That's the only thing they know. They're not actual investors. They bet on one asset class or one asset or one crypto, made a shit ton of money, don't really have the skills per se. So it's like, that's, if crypto and Bitcoin tops, I mean, that might be the end for them in a sense from an investing standpoint, because they don't have any other tools in their toolbox. So they have to believe that what they made their money in, the only thing they kind of understand is what's going to keep giving them payoffs. And it's not a strategy thing. I mean, if we're stock pickers in commodity space, we can jump around and find new cheap stuff. But if you're a Bitcoin maxi, that's the only thing you know. If Bitcoin tops and dies, that's it. Whereas, like, if we own 30 companies and one mining company we own goes bankrupt, that's not the end of it. We go out and find a new one because we're using our investing skills. And that can be applied. We can take our investing skills to some other sectors, for example. But if you only know how to ride FOMO and hype, I mean, you're only good at riding trading sardines. And sure, I guess the caveat being that there's always some FOMO somewhere. And that's ironically also what's going to probably happen in the mining sector, or is already happening, I think. Anyway, I hope you get my point. And then we have, this is the SILJ, I think. Yeah, SILJ. I mean, I'm not an expert chartist or anything like that, but I mean, I like to sometimes look at RSI, for example. For some reason, that's the only real, metric that I can look at and kind of understand. I mean, it's obviously not it doesn't take rocket science to draw a trend line like that, and oh, lo and behold, it's broken out. So that the RSI trends is one of the few that I actually look at, not really trade based off. It's not like I'm waiting for whatever to break out and then I'm buying. I mean, most of the time, and I've said this a lot of time, it's like, yes, most people are like they're breaking the breakouts. They're buying the breakouts. Like now, for example, we're seeing sentiment go up, and even though gold, yes, gold hit 2,600 today, gold futures, but gold also hit 2,500 in April, I think. I think it was April. That's like 5 months ago. Gold hit 3,500 back then. We're only 100. We only today are $100 higher. But why are the gold miners so much higher? Why are a lot of the gold units so much higher? It's not because they're worth a lot more than in April. It's just that they've had time to form an uptrend, and that affects sentiment, and that gets the ball rolling. Because I mean, again, think about it. What makes every gold project worth a lot more at $2,600 gold than 2,500? Or yesterday when gold was still 2,500, why is gold 2,000? No, why is gold at 3,500 in September? Apparently worth that much more to gold companies than when gold hit 3,500 in April. It doesn't make any sense, right? The NPV is not, gold, same gold price at some date is worth a lot more than some other date. Yes, if you can say, oh, well, account for inflation, yeah, sure, I mean, inflation might have gone up a bit, but I hope you get my point. There's no rationality behind that. It's just herd behavior. When an uptrend is formed, for whatever reason, people just get more bullish. Things look cheaper when they're going up. That's it. And that's why I'm more of the, I've stuck through this correction, this correction, this correction. So it's like most people are only wanting to chase breakouts, and of course that can also, lead to some losses, obviously. Here, for example, okay, it broke out, bam, stop loss hit probably, then it, broke higher here, and that didn't go that much higher before a long downtrend again. I'm more the stock picker kind of guy who's just buying more when it gets cheaper. So it's like this was plenty of time to load up for this. This was plenty of time to load up for this. So when the breakout actually occurs, which it looks like it's doing right now, you could have bought a lot here and you would have already almost be up 100%. And that's when the breakout occurs. So if it goes to whatever level and somebody bought the breakout, you might make more double their return. Yes, they might get some. They might get in shorter order. Let's say, if it goes like that, yes. If they make, let's say, 100% in 5 months, and you make 200% in 2 years, for example. Yes, the compounding is extreme in that scenario they have. But they don't really also have any margin of safety, because they're probably, even though it's not, given how much the gold and even the silver price now has moved up, a lot of stuff is still pretty much as cheap as it were back here. So that's a luxury problem, obviously, but because otherwise, if price just went up, like 2016, the silver miners were pricing in a higher silver price than spot. The gold developers, etc., are not pricing in a higher gold price than spot. So if you're just waiting for breakouts, yada yada, and don't think about value, you might also risk obviously buying the top and it goes down. Whereas like if you're a value investor, you'll increasingly simply buy up the buy more the cheaper stuff is. So that provides margin of safety because like okay, went up and down, yada yada yada, sure, but it's like if the companies at least create some value, at least higher lows at least, and when the real stuff comes, I mean you're gonna probably be up so much that it was again well worth it in the end. Here we also have gold futures, and this is I think monthly, and here you also have a arbitrarily put I guess trend line, but you could do one like so, and that would be the start here. So it's like I noted this when it happened, and people thought gold was topping, and sure it could be a big fake up, but this I think to me it's rather suggesting that I think we're in a new inning in a sense, that it's a new paradigm. And again, I don't trade based on that. I own stuff that I think is dirt cheap, absolutely dirt cheap, with gold at 3,500. I think many of them are cheap if gold is 2,500. So I don't really care that much. My buying might look stupid if gold goes to 2,000 or 1,900. Sure, then I would have overpaid today. Is that gonna happen? Maybe, maybe not. But that's quite some margin of safety. Yeah, so I mean, this is again pretty epic. So take this short S&P divided by commodities, which is a new all-time high, and then you have mining industries percent of global equities. This is from Crescat, Tyber Costa. So I of course don't know how you exactly, and this chart is as of May 13, so it's probably a bit higher today, I guess, maybe not much, but it's like the record low. We had record low of gold mining or mining, mining exposure. That's like whenever you see record lows, what comes after might be quite the mean reversion, and one mean reversion big enough that it would be worth even if you had to wait 5 years. Even I know 5 months in this sector in investing is a lifetime, but I'm just saying, given the enormity of some of these charts, I mean, imagine if you just reached whatever, the mean, and obviously as usually happens, when it's overshot, it undershoots, and when it undershoots, it overshoots, etc., etc. So I mean, I don't think we're gonna go back to any kind of mean. I wouldn't be surprised if we overshot to the other side. And then you can imagine, picture this scenario: gold goes to 5,000, and basically, all the trillions of dollars out there want some gold exposure, either via bullion or mining companies. What do you think this sector is going to look at? Let's say add on, a typical bull euphoric top, for example, or we're actually trading at premiums to MPV. I mean, that's one thing. I was discussing this earlier on Key Report, might have been off mic, but it's like, I'm not worried about selling. I'm not seeing euphoric premiums anywhere. Yes, some juniors might be relatively overvalued versus some other juniors, but I'm not seeing projects trade at 1.2 times their MPV or NAV or whatever, and just assumes that the gold price is going to keep going, yada yada. I mean, like Integra Gold in 2017, it got acquired for a 69% premium to spot MPV of their project. So it's like what Integra Gold's Lamaque project, according to the PA, what that was worth at that gold price, which was $12.50 at the time, they got acquired 69% on top of that. So the acquirer Eldorado basically paid for, on paper they paid for a higher gold price than the current spot price. So Obviously, they look smart today because gold just kept going up and all that. But think about that. I mean, the closest one right now is like Amex Exploration, for example. They have similar, somewhat similar grades, similar tonnage, and all that. I mean, they're expecting to put out the economic study, a new one soon. But I mean, their NPV at today's gold price, I don't know what it's gonna be, but it's probably 1.5 billion or something or more. So imagine, I mean, they're trading at 330 million or something. So if this was like 2017, just an Integra Gold takeover, and this is obviously just a simplification. Don't expect every takeover out there to be like 69% premium to NPV at spot gold. But still, I mean, if we're talking 69% premium, maybe that would be 2 billion for Amex. And Amex is trading at whatever 330 million or 350 million or something. So that's what I mean. It's like I'm not really worried about overpaying or that some hodl positions are overvalued and the risks are to the downside. It's like they're not even close to euphoric levels where the companies are pricing in a much better future than the current picture. And I've heard, I mean, somebody, I think it was a Goodman of Dundee, who said that there was a time when the gold sector was so hot, maybe this was in the 70s or something, or 80s, that gold in the ground was trading at a higher price than bullion, which is obviously insanely stupid. That you're paying more for gold that's in Portugal-sized, Portugal-sized in the ground than a mined ounce, where you have already had all the capex and taxes and yada yada cost to pull it out. I mean, that's crazy, but at lows and highs, crazy stuff can happen, and at least there's probably been quite a few examples where companies got acquired, 2011 at higher than their NPVs. That I'm pretty sure about. So that's the stuff I would expect when we see stuff like that. When things get acquired for above, premium to their spot NPVs, yeah, then we're in, then sentiment is high. Then there's FOMO even from the big guys, for example. I still think they're quite gun shy now, because they did that, of course, in 2011, etc. This is, I love this. I posted this probably a few times. This is a picture I think somebody posted some years ago or something from a textbook, trading psychology or something. Psychology of the long holder at various stages of the cycle. Euphoria, overvaluation, depression, undervaluation. I mean, look at that chart and then look at the TSXV composite index. I mean, this for sure rhymes, and that makes perfect sense. Because whatever market it is, whatever asset it is, it's human nature works the same. So according to this, I guess we're kind of here or something, or yeah, maybe we're around hope here. And if we go back here, then hope would be here. So maybe we are having a nice run up on hope, and then we have some maybe whatever consolidation, and then optimist, then belief, and then thrill and euphoria. I mean, and who knows how many 100% we are away from this, and who knows how many months or years we are from this. So if you just look at the TSXV, I mean, this looks like a major, it's like 20 years of short here, and we're basically just getting off the bottom. So, I mean, I've seen some who have made, good money, let's say, in gold miners, the major ones. GDX and Agnico, maybe Newmont, etc. And they feel pretty happy about it. Like, okay, whoa, I made, 50% or 100% in Agnico in a year. And it's like, I would be starting to get quite paranoid. And of course, typically Newmont, etc., they're never extremely undervalued. And they're never... Well, they can be, I guess, extremely overvalued. But it's like, I'm not interested in the Newmonts, etc., because there's a million analysts following them, and you're basically just betting on the gold price and gold majors, most of them. and end up shitting the bed at the end of the day, and that's why they have had such horrible graphs, most of them. So I'm not interested in that. But if we look at like TSXV, which I guess is more, junior focus, and it's not only mining, but still, I mean, this looks like we're just about turning things around after like a 20-year bear market. So I don't know how that's going to play out. Will that mean that the Canadian currency is going to go to shit, or is mining going to have a huge bull market, or is everything artificial gonna die, and we're gonna have everybody flees into real assets, bullion, and when that sells out, they go into juniors or miners. I don't know how it's gonna play out, but I for sure wouldn't be looking for a top anytime soon in this picture, and of course I'm not looking for it either. And one thing to note, like recruiting, this is GDXJ. Remember, the 80% of juniors are valueless. Tremendous value resides in the rest. Do your own due diligence. So remember that. I mean, this is really important. We're gonna get back to that later. There's so much. I mean, most juniors out there are crap. Even the ones that have resources, they have projects that probably never are gonna get into production unless the metal stays at really high values, prices, etc. Because and this I think goes especially for a lot of silver juniors. I mean, most silver pros are not that good. I mean, how many people do you know have been seriously successful in the mining space? First Majestic basically has sucked ass forever. Hecla sucked ass forever. Pan American Silver, that was a success when they ramped up, and then they got kind of too big. And most of these companies are more into gold nowadays as well. So they're not even pure silver companies. Silver's been a really tricky commodity to make any money in for a mining company. But the one-off really high grade or low cost ones like Gatos and Silvercrest, etc., who also have like 50%, I think, for Silvercrest, maybe 50% is gold. So it's not only silver, but they simply have high margin projects, which also contain silver, so they're good businesses. Most projects are not good. Most projects don't make a lot of money. Most projects do not, should not be mines anytime soon at least. But when the FOMO hits, you're gonna have most people, everybody that sold low because they had no idea what they owned. They're also the type of people that are going to be buying the highs and buying stuff higher and higher and higher because they have no idea what they own. At the end of the day, the only thing you can buy cheap is if it's actual value. There's plenty of stuff that's gone down a lot in price and might go up 10x in price, who never really have any value. So they were never cheap, they're just trading sardines. That goes for the vast majority. I do not expect to necessarily be in any of the best performing juniors bottom to top. Why? Because most of them, either they're super high risk and got lucky, or, and not all of them, but most of them, or they're simply really low priced shitcows. They're gonna get absolutely pumped, and there's gonna be maybe whatever, huge promotional campaigns, and they're illiquid and yada yada. It's like, well, the good old Bear Creek Mining. They've had one of their big projects, I don't know how, 20 years, 10 years, 15 years. Never really gone anywhere because I mean, I don't know the story too well, but it's basically been a trading sardine. Bear Creek Mining go up 500 to 1,000%, then it crashes 80 to 90%. Now they have production, so it's not the same company, but I hope you catch my drift. I mean, the only thing you really that you're buying cheap is not the same as buying low. Anything can be low, but if it's cheap, it also means that there's some actual value there, or an actual company. There's high risk juniors I think are really, really cheap, but they still might have only 20% chance of success, let's say. But they have legit success. They don't just have moose pasture or a project that everybody knows will never get developed. that they have shot at real value, or you buy something that has real value, like a good deposit, a tier 2 deposit, tier 3 that could become tier 2, or a tier 2 that could become tier 1, and it's selling for way less than what that is worth. That is buying cheap. So yeah, here's the TSX V again, and I probably noted this, that, I mean, pretty, in my opinion, remarkable that you could make a monthly trend line like this and it's just breaking out now. And who knows? I mean, again, I'm not a greatest shortist, but yes, are we close to a top? Should we, if you didn't know this asset and you say, whoa, something's been a bear market for 20 years and it goes up here, are you looking for it to go down and go down forever? Especially when a lot of the stuff is still like really, really cheap? No, I would think the risks are to the upside. This, I've shown this before, you make most of your money in bear market, you just don't realize it at the time. And that's one of the hardest concepts for people to figure out, because almost everybody thinks that if you're not making money, if you're, pardon this, I was trying to find my own meme about, yeah, thankfully we didn't hit 2,500, so I didn't get my butt lift. What did I do now? Yeah, okay, back here. You make most of your money in a bear market, you just don't realize at the time, because everybody thinks that the only successful strategy if you're making money every week, every month, every year. That's how people view it. If your account is not going up, something has to be not working. Whereas we have, maybe that's not the best one actually. Let's look at where's the, well, maybe this scale is too big to. Well, maybe we'll find something later. Anyway, you make most of your money in a bear market, you just don't realize it at the time, because that's the thing. When the breakouts actually occur, a lot of juniors, for example, they're up 100-200% from the lows. And if you had a long bear market, which we had in the juniors, for example, you had plenty of time. You had years, months and years to buy them low. And that's the thing that I've said this before. It's like people think, when I showed some junior charts, highly volatile charts, I think we actually have one here. Yeah. So this is some junior, I think silver junior. I mean, people think, and I've heard this, like, well, how do you know when the bottom is in? Like people lose because they're not buying here. Oh yeah, sure, that's why they lose. I mean, the rally from here to here might be like 800%. If you even get close to this, and this is more, I think, have been more of a trading sardine, so it's not even, a really, company growth. But if you get close, this is probably months or years, and then boom, made money on every single trade. Here, same thing, boom, made money on every single trade. It's people use that as a copium. There's like, well, I gotta get in here, otherwise I'm not making money. So if they start buying here, and they buy and buy and buy and buy and buy, they can't buy here, because they look stupid and every buy is in the red, so they sell out. Whereas this in itself doesn't make money. It's the delta between where you bought it and where you sold it, right? So if you buy here, yes, you're buying in a bull market, but all the major gains are already gone. So this is when this was happening, this was a bear market. So the biggest future returns, the biggest possible trades you can make is when you buy in a bear market. And that's why this is 100% true. You make most of your money in a bear market. You just don't realize it at the time. So this is breaking news. Out of the top 200 insider trades over last week by value, 0 of 200 were buy orders. Never seen anything like it in my life. So this is, I guess, the broader market or something. But think about that. And that is the very thing that's where is it? So let's say that's S&P 500. See top 200 insider trades, every single one of them are sells. So they're not suggesting that they're cheap, and you wouldn't find that in the mining sector right now, that 200 out of 200 are insider selling. I think there's still more buying than selling in the mining space, especially the juniors. So think about that. That's where most people are packed, in the very sector that's like at record highs, and insiders are basically cashing in. And still, that is where everybody is. Why? Because nobody wants to sell high. Everybody wants to buy high because it can go higher. But this is like, I don't know if there are many clear warning signs. So yeah, also everybody buying the green box is non-profit. Everybody in the red box is still showing a loss. I mean, back here, for example, the green box would just be down here. Now, recently with GDX, and this is a day-old chart, so it's even higher today. I think it's up here. So basically, if you bought GDX at any single point in time over the last 20 years, today every single buy would be in profit. Here, every single buy would be red. Here, most of them would be green, etc., etc. Same sector, and here the difference here is like almost everything would be at a loss. A few months after, 70% of all buys would be in profit. Yeah, tell me again how impossible it is to make my money in a cyclical. Everybody know. I mean, this is blatantly obvious, and you can see that on the Barron's Gold Mining 100-year index. And then, of course, you need to factor in inflation, though maybe green from a pure dollar standpoint, but still deeply red factoring inflation. Well, some of them have had some dividends as well. But the point is, here it wasn't even cheap. Here, dirt cheap, dirt cheap, dirt cheap, cheap even here, etc., etc. So with some common sense and patience, and knowing that this sector is cyclical, the only reason we lose is because we shoot ourselves in the foot. And I know that's very hard for most people to hear. That's the thing. Most people want to think that there's some thing that makes it impossible to make money in a cyclical sector, for example. And of course, that's what if you're, I've been, one guy, he actually ended up, at least unfollowing me. Maybe he even blocked me, I'm not sure. But he was all hopped up on, and I mentioned he's been featured in some videos before, because he went, basically, I think, went all in on Meta Planet and crypto like 4 months ago or something, and sold out of his juniors because he got pissed off when, because I just kept saying, buy, they're cheap, and he's like, he didn't want to, he was afraid that he was obviously wrong. So that upset him, that I was, my opinion was that you shouldn't be selling juniors here, and then he's afraid of losing out, and then he gets pissed off and tries to, well, look how bad they have performed, yada yada. And it's like, yeah, that's basically half the case, how badly they have performed, and now they are performing well. But that's a hard pill to swallow. That's like, we really don't have any excuses to not make money in a cyclical sector, because this is as predictable as can be. Shit crashes, shit goes up, shit crashes, shit goes up. This is a truth, basically, in a cyclical sector. That's why it's called cyclical. It's our decisions, what we do, our strategies that simply suck. And I'm not like, that's, with that said, this is not for 95% of people can't beat an index, active investors. And that's like regular stocks. Junior sector, probably less than that. So I'm not saying it's easy from a human perspective. But if we start taking, accountability, and it's like, okay, I get it. I have to, be okay, basically averaging down when everything sucks and everybody wants to sell and everybody says that it's going to go lower. I just have to go against that and keep buying, because there's never been an occasion where a cyclical sector has been cheap forever. And when it turns from super cheap to not super cheap, you'll make a lot of money, and that always happens. So you know that's true. It's just very hard to uh, put that into practice in a sense. But let's face it, it's like that's the reality of it. We don't really every we lose because we make bad decisions. That can come from whatever. We don't have a strategy. We just buy without knowing what we own. Or portfolio sizing sucks, meaning like we go full bore into a high risk play, which might be a good play, but we simply risk too much. So there's some, 1,000 reasons, and I make mistakes all the time. But the thing is that you shouldn't make the big mistakes, like selling low in a cyclical sector, because that's the cardinal sin. That's the thing that 95% can't stop them from doing. So forget about stock picking or portfolio sizing. They just can't buy a cyclical sector low. Yeah, we've seen this. This is Hecla. I mean, this chart goes back to like 1981. So this is like a 45-year long chart, log chart. And again, it's like, how great has this silver company been as an investor? Sure, you've gotten some dividends along the way, but basically, would you even keep up with inflation? I don't know. I mean, I'm assuming that they can't have been, well, not the real inflation. So it's simply very hard to be a mining miner. And of course, that's why I think we're seeing so many takeovers, mostly for producing assets. Why? Because it's so goddamn hard to find something and put it into production today. I mean, you look at any other sector basically, and it's like, hey, we want to grow. Great. Here, we'll build a new factory and have it up in a year, from conception to production start, or 2 years. In the mining sector, it's like, hey, we found something. Great. Take 3 years to prove it up, then 10 years to permit. And by that time, your first mine is already out of war. So it is a shitty sector, and that's why. That's something I think one has to account for. That's why lately especially been talking about second part of the Lassonde curve, and how possible it is to put into production. Because in the good old days, I mean, when permitting was a non-issue, you would just buy what a mining company would just buy whatever project that looks great, because they knew they were going to get it into production if they have the money. Nowadays it's like permitting and timeline and yada yada yada, ESG and social proof, or whatever it's called. You know what I mean. So that affects the NAV so much, right? I mean, if you have a project, it's that mine that's operating today, and you have the same kind of project, but it's not going to be permitted in 10 years. I mean, that's quite a bit of difference in value, because that's 10 years of discounting to do up until today. So that project is worth a lot less than if you had even if it wasn't built, but if it was permitted today. It's a big difference. I mean, is that going to change? I mean, I'm hoping so. Obviously, we're seeing that in EU and America, we're talking about speeding up timelines for especially critical minerals. So that's because, I mean, it's been almost impossible to organically grow in the mining sector, and I think that's why Agnico Eagle loves their regional approach. Brownfield. That's what I hear, that the majors, most of their money gets spent on brownfield. Why? Probably because it's so much easier to permit. They have the probably local support, the ones there, the locals, they know mining, they want to keep their jobs, etc. So it's easier to permit a expansion or a satellite deposit than it is to bring another project online. So it's like Agnico, they play that very well. I mean, they have huge land packages, but they tend to be not one-offs. They amass like strategic land packages, and because they plan to stay in one area for 50 years, for example. And that's going to obviously make it easier to permit, because they know everyone, they know how the permitting works, and all of that. So that's one thing. I wouldn't want to be again, it's like, imagine you find something in Canada today, and you want to be you dream about building a gold company that's going to grow. Again, from discovery, it might be 10 years, even if it's a really good deposit, it might be 10 years before that's in production. And you have no revenues up until then. So you can start growing beyond that in 10 years on a self-funded basis. It's harsh, but that's also one reason for why I think we're gonna have a really good bull, because it is so goddamn hard to put anything into production. Yeah, so this is just this is from a year ago actually. Yeah, August. Sentiment can change quickly, and it always changes, and it always will. I mean, I haven't been asked to do a copium video in a few months now, at least. So that says something. People need to hear, because it is hard not to sell low. It is hard to buy low. And that's why I kept doing the copium videos, because I know it's like, it pains me to see people, let's say, especially if they're followers, especially if I, have some kind of relationship with them, that they've suffered through, with the rest of us, or the few that actually suffered through it, the bear market, and not stay for the bull market. But now, thankfully, I haven't heard anything about bull market or copium videos in some months, and that speaks volumes as well. Now it's getting easier. Now people have no problem buying, right? Because things are going up. And just can see if I can. Oh yeah, let's. Well, actually, we have a live one here. So I just revisited. It's like the theoretical portfolios I made. I called one gambler and one third party validated. And my point was that I'm going to prove that you can make money without even trading, just by holding from those levels. And note that this, for example, is May 2023. That was not the bear market bottom. So it wasn't like a portfolio that got in at the bottom. Let's see the track record. I mean, Headwater is on the cusp, or have made a discovery. They haven't just gotten any value for it, because early stage explorers haven't really started to run yet. Tectonic might be on the cusp. Inflection, closer than ever, more land package than ever, not getting anything for it. Brixton Metals, they've had some success recently. They had, BHP, so large price. Fathom Nickel, they kind of bombed out, missed. Goliath up 300%. Condor missed on Pucamayo, but a lot of projects. But again, these are mostly the ones that move last. Almost all of these are like the end of the risk curve. Most of these don't have a deposit yet, right? And that's, they only, quote, most of them only have potential. Not all of them, but a lot of them have mostly potential. That's what gets valued the last. That's when everything else has ran, basically, and people are looking for excuses, risks to the upside. All of these have risks to the upside. Anyone that's drilling a target, there's a risk that they might hit it. In the bear market bottom, and even still now, nobody gives a shit about potential. Nobody prices in potential, because that's risk, right? There's a risk of missing. And that's something people don't want to deal with. Altamira, encouraging news today. Western Alaska hasn't done much now in quite some time. Their high-grade resource still there. Dynasty Gold don't follow that really much. This is West Point. They pretty much have a deposit. Pacific Ridge been diluted to hell. Juggernaut, they have a new project. Rackla Metals, hoping that they'll find another Snowline type discovery, which is an if. SK Mining, Great Land Package, haven't done much. Cartier Silver haven't done much. Offer Gold, I think maybe their main thing was the lithium at that point, and obviously we know lithium crashed. District Metal up 786%. Maverick, also a lithium speculation, minus 88. Alpha Exploration, have all the projects, but all of these have been in the dumpsters, and this part of the junior sector hasn't turned yet. Still, just because of a few success stories so far and have not ended, all of these might go back down. Well, I guess Goliath is probably not going to go back down. But Rackla, if they totally miss, that could go down. Absolutely. District Metals, if for some reason, they don't lift the moratorium, whatever. the situation is fluid, right? And at the same time, Brixton could make any of these that still have a project target, let's say some money, have a pulse. They can also be. They also have the chance to hit something. But my point is that even though this high risk gambler portfolio, just threw some names together, mostly the highest risk ones, that's still up 45% in 2 years. 45% in 2 years is not even, I mean, the stock market averages over long term 10% per year. So even this portfolio with only a few winners, and not even like outrageous winners in that sense. Well, I guess this street is kind of outrageous. Still green, with so many failures, and some down 93%, 88%, 88%, 80%. And then we have the Hydra, September 10. I mean, this is just basically, 3 parts of the now 4-part new Quest story. And the third party validated. I made this portfolio to show, it's like, and you remember probably on KU Report, and I probably did some title about that, about the foolproofing your portfolio. If you have, that was my share by the way, I didn't fart. If you have, let's say, majors or smart money or strategic investors, Landins, BHP, Newmonts, yada yada yada, McEwen's, if you have kind of fresh vote of confidence from third-party people, that goes a long way. They know more about mining and the geologic potential than you do, and what's required to make a mine. All of these, I think, have some kind of mid-tier or major, or like Lundin or McEwen in them. Okay, and this was created. Oh, that was also 2023. So 2 years. Also not at the bottom, not at the bear market bottom, 2023. The juniors kept going down for 2024 as well. So not at the bottom, still up 155% without any trading needed, without any weighting. Not that any story had a higher weighting because it was better risk reward. No, just 20. I think it's 20. 20 juniors. Most of them I know. 20 juniors with third-party validation. Lo and behold, up 155%. That probably beat the shit out of most active junior portfolios that's been around for since June 2023. Especially, yes, there's obviously going to be some who have very concentrated portfolios, but these were all this is a relatively diversified junior portfolio. Still great, 155% in 2 years. That's what Buffett dreams about compounding at today. That's again my point. There are no real excuses. We can foolproof our portfolios. It's just that we have a tendency to A, sell low, and B, we always want to be too cute. I've seen so many, in my opinion, garbage portfolios out there with companies, juniors I wouldn't touch. Most of them I don't think, obviously, that they own garbage, and they just are expecting, they're buying into the silver to $100, etc., etc. So they're just assuming that they're gonna get bailed out by the silver price and whatnot. They have no idea what they own. Then, most of them, they buy stuff that's not even cheap, but it's gone down in price, and they keep believing that if silver goes a lot higher, then I'll make money. That's, in my opinion, not a great strategy. It's like, especially long term. It's like, that's not stock picking. That's mostly a speculation. Let's see, what did we have more? Let's take a look at that later. Nasdaq divided by Huey, that also looks interesting. As I've shown before, this topped same point as it topped when the bull market started, and it's been going down, and I don't know how important this is, but obviously you can make some kind of trend line or channel, and it's kind of at the cusp, and already Huey's up quite a bit. So literally when I posted this, it's like, oh man, last time it hit this ratio, that was the start of a 11-year bull market, and So far, it looks like the most opportune time to buy, basically. Uh, well, we can, yeah, let's look at GDX. Yeah, GDX. So here, yes. So basically, again, any single buy in GDX since inception, I think it was inception. Everything in this green box is now in the money. So there was a period here where your buy would still be red, and then people say yes, but inflation, yeah, sure, but if you load it up here, I mean, you're up quite a bit. Or load it up here. It's like if you have had any sense of what value is and what is cheap, there's no excuses really to not have made money in GDX up until now. I can't do it because nothing really typically looks cheap enough for me to hold for a long time. But I did, buy a lot of silver standard and stuff here at the bottom because they were trading at a ridiculous level. So it's not like you couldn't do it. And I bought some Endeavor's gold for not that long ago, I guess a year ago, for some family portfolios, and that did well. I mean, that was mostly because they got kicked in the teeth because I think there was some shenanigans with the CEO. But my point is, for sure, you can have producers that get cheap and are obvious buys, and you can make money that way. And if you think they're cheap here and they go lower, you just buy more, and sooner or later you're gonna be up. So there's many ways to skin the cat. So let's round up with strategies. Most people, I think, have never seen a bull market. I have not really seen a bull market per se. I've seen bull legs, if that makes sense, which would be this one and this one. Or I want to say this one, and then this one. And now this is my third bull leg, let's say. But I've never really seen a bull market to the tune of, what happened here. But if let's do like this. Where the heck do I? Oh yeah, okay. So let's look at Huey alone. Let's do week. Here you have, by the way, like pretty obvious cycles. So let's say this is a bull market. 2000 whenever, yeah, November 2000 up until, let's take this. So 8 years bull market. You see here how many, or let's do it like this. Just how many, even in a bull market, an 8-year long bull market. So maybe now we're here. I don't know. Maybe it's like, we're at the cusp, whatever. We could be here. I don't know exactly, but here consolidation, and it's like correction, up, correction, up, correction, then keeps going up. Some net gains, and this is why I keep talking about when we looked at Lundin Gold, etc. before. And Great Bear, Snowline Gold. 95% of any success story is spent in consolidation, either correcting or trading sideways. So how much of actual, just net gains did we see in the Huey in an 8-year bull market? This was 2003 December to 2006 December. 3 years consolidation in a bull market, which we knew later on. 3 years of sideways action. What do you think people are? Do you think people are going to lose their minds if GDX all of a sudden starts trading sideways for 3 years? Yeah, I think so. They're going to lose their absolute minds. And again, just look how many corrections, like correction, and this is like, Huey, correction, small correction, up, correction, correction. There's pretty much as many corrections in a bull market as there are in a bear market. It's just that the net runs, the infrequent net runs is to the upside, whereas like the infrequent net losses, let's say, are to the downside, because then it started to basically consolidate, dropped a bit more, but still kind of went back up, and then So most of the time you just get grinded out in a bear market, and even a bull market is probably going to grind out most people. Because it's not really that typical. I mean, this rally was breathtaking. This rally was breathtaking. This was pretty much a breathtaking rally. These were all reactions. Or, counter rallies, whatever. And this is, I mean, this run here is kind of like this. And we've seen what happens when after this sector goes bonkers like this. Here it went down for 2 years. Here it went down for 2 years after you have like a streak like this. Here it didn't really, it corrected and then went up and corrected, went up, corrected. So it was a grind higher after the initial like super pop. I don't know what's going to happen. I'm just saying that, in my opinion, you should stick to your guns. I have no idea where GDX is going to go. I know sentiment is pretty goddamn high right now. Why wouldn't it? Newmont is, I think, after today, maybe the best performing stock in the S&P this year. S&P 500. Why wouldn't the sentiment be high? So we're in the gold mines, the larger ones, sentiment is high. In the gold juniors, sentiment is not that high. And I have no idea. I don't know how cheap Newmont is. Maybe it's 20% discount to fair value at these gold prices, or maybe there is no discount anymore. I'm not interested. I want to stack the cards, stack the deck in my favor. I am chronically in companies that I think are cheap and going to be worth a lot more, where an increase in gold price is more of a bonus. So that's one thing I would just like to caution people, that if you buy it, like today for example, super and super sentiment. I was putting out memes, everybody's celebrating, everybody's cheering like we actually won the gold medal, pardon the pun, whatever, like we accomplished something because we have a day that every 3 junior is up 10% or something. I mean that's not too much for me. I'm looking for a multi-year bull phase. Some of the juniors I own, I think they could go up 5 to 10x from here, from these levels, even with almost pretty much sideways gold price. Some of the high risk ones, I mean they could go up 10, 20, 30%, 10, 20, 30, 40 times with no change in the gold price, just that they need to hit their early stage explorers. That's without, I'm not even factoring in a higher gold price. And I don't give a shit what Newmont trades at. I only own companies where I'm excited about the future. Am I excited about gold's future? Sure. I think it's going to keep going higher over time. Am I excited about Newmont or GDX? Like, I don't know. If gold keeps going up, yeah, they'll do well. But I'm really, really excited about the companies I own. If I see that they have ways of creating value for the next 3 years, or I mean some even probably have ways of growing for 5-10 years, then I don't really need to worry about that much else. If they create value, if they increase in value over the next 3, 5, 10 years, obviously I would expect the share price to be higher, and especially if they start off with pricing in $2,500 gold, and we already have a head start because gold is closer to 3,600. But know what you own. Believe me, it's like when sentiment gets high, it's a pumper's dream. We're already seeing some, juniors go up on absolutely nothing. Some, especially silver juniors, for example, did just go up. Yes, silver is at $40 or $41, but silver was at $37 not, some months ago. And their projects are not that more valuable when silver is 41 than 37. Why? Because they're not even close to being in production, and they might have shit projects that are never going to be in production. But sentiment is a lot higher. But it's live by the sword, die by the sword. If you're And because I'm affected by this too. It's like on one hand, and I'm debating this internally. On one hand, you're like, well, let's say some obvious like value cases, but they tend to not be like super duper cheap. I mean, if they're a real value case, they're not trading for 20 million. Let's say a few 100 million. In that case, it's like nobody can just sneeze on that stock, right? And it's gonna go up 200 million market cap. No, that takes some like process, some churning, some good news and time, execution, all that. Whereas like you have some shitco, illiquid junior, where somebody can pump that and $20,000 of buying has it up 30%. That's completely different, let's say, quote, win condition. You can't just sneeze at Agnico even if it's cheap and it's just up 30% without anything happening. Some illiquid silver or some illiquid shitcoins, you can do that. And people are gonna get that's quick profits. Usually it's pump and dumps. But that gets people excited. The idea of quick profit. So it's like in one sense I'm like, oh, maybe one should be in these silver juniors. Most of them are not even as cheap as the gold juniors, but it's simply what the sheep, let's say, really really likes. There's nothing, and Rick Rule says the same. It's like silver is crazy on a whole other level, but I would say I'd keep in mind that's like if it's not a legit project and all that, then it's in fact a trading sardine. So you're doing the greater fool trading strategy, and you have to know that because as we saw, there's going to be times maybe even if this is a full-blown bull market that's going to last for 10 years or 5 years, there's going to be months if not years of consolidation. How are you going to react if you you bought some micro cappers yesterday or today? Sentiment was hot. Uh, Over the next 2 weeks, they're down 20-30%, and the sentiment on Twitter is kind of poor. That maybe this was a fake breakout in gold and silver has problem going through $40. What are you going to do? Are you going to average down? Because if you kind of know that, hey, these are mostly trading sardines, and they keep going down, then I would think you're gonna start fearing that, oh shit, maybe we're in for a longer correction here, and it's actually gonna matter how crap this company is, or that they don't have anything, and I'm gonna lose my shirt. Whereas like if you have a legit company, the company you have high conviction, you think this is super cheap, it's real value, they can be worth a lot more in 3 years even without the help of metal prices, you would probably be much more inclined to actually buy any dips. You wouldn't have a problem to hold that stock for a long time, even if maybe it went like this or whatever. Because in your mind, maybe you think it's worth this much right now, and you think the value curve, as you know it now without any more information, is like that. So you think, oh, it's already cheap. If it goes down, I'm just going to buy even more, yada yada. Whereas like if you have no idea what you think it's worth, and it's only, you just got excited by the idea that's like, whoa, if sentiment gets better and everybody piles into these silver juniors, they can go up really quickly. They can go up a lot really quickly, and that's 100% true. They can, but just know what you're into. You have to simulate a future, maybe next week, maybe tomorrow, maybe in 2 months, where sentiment is not that great, where the trend is down, where there's profit taking, where something has happened and people sell. What do you do then? Do you have a strategy for that, or do you only have a strategy for when things feel good and they're going up? Make no mistake, I think majority of people probably have squandered every bull market. That's the thing. I mean, I don't squander any bull market because I never sell. The problem is that I also stay for the so far in every bear leg. So I get a lot of the upside because I'm there to the top. I'm also along for the top to the bottom. So that's the trade-off I have. Whereas I bet everybody's always trying to be too cute by short-term trading everything. I'm just saying, it's like, you know, on one hand, this appears to be a absolutely, historic, maybe mean reversion coming, and you're stressed about, oh, I got to make the most of it. This is not going to happen again, and that might be true. But at the same time, it's like, don't f it up. What if you have if we have a 5-year bull market in front of us? I mean, I think it's worth it to make sure you get 500 to 1,000% than gambling trying to get 10,000%, if you know what I mean. Because there are a lot of people, I have no doubt, that end up trading away most of their profits. It's like Great Bear. Who made the most money in Great Bear, do you think? I'm pretty sure it was anybody who just held the stock, not the one that traded it, even though it was a bull market. Or let's say Lundin Gold. In hindsight, everything looks so easy. Oh, this would be such a nice ride. It's like, I think I said that on the K report today, that like what today feels like, don't kid yourself to believe that a bull market is going to feel like today every day. Like in a bull market, the only direction is up and every day. That is not going to be the case. Absolutely not going to be the case. Because if you look at Lundin Gold, it's like, oh great, I mean this looks super easy, it's just an uptrend, that would be super easy to hold. Let's look at a log chart, and then it's like, oh, reality starts to set in a sense, like, oh Jesus, here we had a top and that was traded sideways to down for 3 years. Oh, I bet that was super easy to hold through. Then you get some, respite, and then it's like, oh, sideways for 4 months again before higher. Oh, and then it crashed down and went back to levels not seen since 2017, 3 years earlier. I mean, I bet that felt great. And when it topped here, same thing. What's that, like 2020, 2022? 2 years correction, great. Or consolidation, but that felt great. Then up a bit, broke out, slammed down, went up a bit higher, slammed down again, went up a bit higher, then it started to consolidate again. I mean, it's like every single one of these corrections is gonna have people pulling their hair. Make no mistake about it. I think it's a great thing to just look at how a bull market or a really, long-term well-performing stock, how it actually looks. Here everybody thought they were stupid. Here everybody thought they were stupid. Same here, same here. You probably feel stupid 95% of the time in a bull market, except for when you zoom out and look when time has passed, how far you come. So do you think it's like Lundin Gold? Most people, it's like how these insane returns. What do we see? Yeah, that's from holding. That's not from trading. That's from holding. And how many people do you think just held? I mean, most people who held this, it's like they're just betting on the Lundins that it's just gonna go up. I know quite a few that own Lundin Gold, and they don't really know much about mining. But it's the Lundins and it's gold, and why not? Because gold is going higher. And that proved to be the case. That's a very simple case. You're just betting on management and the backers. And give them time, because the only way to capture alpha of a superior team is by time held. So I guess a long way to wrap it up is that you have to, again, even if we are in a bull, forget about making, in my opinion, the max amount of potential profits, because that's probably going to lead you down the path of short-term trading. As soon as something runs, you want to jump on that, and you're probably going to buy short-term highs, and then they correct, and then you realize, oh shit, I just bought this because I thought it was going to go up tomorrow and next week as well, and it did, and now I don't know what to do because I'm not even sure what I own. That's one way to squander it. And yeah, I mean, if you just do stock picking, in my opinion, where it's like, I can see that this company can grow a lot over the next 5 years, let's say. Until that changes or it gets too pricey, for example, you're probably gonna make money. So I would put an emphasis on making sure to make a good amount of money than trying to be a perfectionist. Go for the maximum amount of money. I think that's probably going to end up in you shooting yourself in the foot, if I had to guess. Because you're not going to be prepared for all these potential, consolidations and let's see here. Consolidations and corrections and multi-year consolidations. Whereas, like, if you think you own a stock and you think the growth curve is like that, it's like wherever you are in this trend here, you think that, well, I think it's going to be worth more in 2 years. And then 2 years comes, worth more, you made money, and worth a lot more if you bought any of these lows. Where if this was a trading sardine, you would buy every breakout basically, and sometimes you would have a good run. And then it peeled over. It's like, okay, here it's almost back to where it started. Here it had a good run, almost retraced all the way back. So it's like, if you're not an expert, I was gonna say, like, short-term trade or whatever, I think the biggest possible gains is gonna come from people holding, except for maybe if you're a chronic, let's say, pump and dumper. It jumps from a liquid junior to a liquid junior, and let's say basically, have your followers as exit liquidity. Maybe you could do even better then, but the thing with that is that at the end, that's not really a valid strategy, because as soon as you come up with some kind of big money, let's say, you can't really do that. So it only works if you have a small portfolio yourself, and that's a big edge. A small portfolio is a really, really big edge. That's your biggest edge. But it's not long-term viable. At some point in time, you have to figure out how to actually invest, if you know what I mean. So that's good. Might as well learn that early. And sure, again, I don't know. Maybe people who have the most illiquid shitcoins are gonna end up making the most amount of money. But it's like, how easy are you gonna sleep if you own just a bunch of illiquid shitcoins? Because nobody knows what's gonna happen. There's a possibility again that, let's say we go in whatever, GDX breaks out here, false breakout, and then corrects for 4 months or something, and that starts to weigh on sentiment. It's like you're probably gonna sell your shitcoins, because then you're gonna be talking about it's a double top fake breakout and it's gonna go down and the bull market is over. My point is, simulate a bunch of different scenarios, and do you have a strategy for each of them? Because buying something that's going up and is hot today, just because you think it's going to go up tomorrow because everybody else is saying that's not a strategy, because then you have to face maybe the brutal and harsh reality that maybe it does not go up tomorrow, maybe it goes down tomorrow, maybe it goes down a lot tomorrow. But is it a long-term case? Then you really don't care that much, right? If it's a long-term case, it's volatility on the way to, I like to think of it as, a lot of companies I buy, that I have an idea how they could look at in 3 years from now. So I'm buying that potential future at the price today, and I want as probable and as high of a delta as possible. And then the case is at face value, without value shuffling or accounting for if they get too pricey, that if that case is successful, I'm gonna make this much in 3 years from buying today and holding for 3 years. That's pretty clear cut simple. Does not account for gold price or anything, just company specific fundamentals versus price today. So let's not, yes, do not squander a bull market. And honestly, if you get really good at investing, it's like for example, some of my personal portfolios, they're underperforming so far this year. I think they're underperforming a lot of people's portfolio, underperforming GDXG so far. One big reason is some big weightings that have not started to revalue. That's the simple truth of it. But over the long term, it's like so far I don't think I don't remember. I don't think I've had a down year so far. But it's very like in any portfolio. But it's very like sometimes you're red for the year and then something comes back. Because as you probably know, I tend to catch falling knives. So if I think something becomes cheap, it usually keeps getting cheaper. So I'm in the red and then I average down and then like boom, revaluation happen. All of a sudden, everybody's in the green. That obviously I have a lot of losers as well, but the idea that sometimes I have a hard time not doubling down if I think something is cheap and it goes down in price. That's obviously kind of what you should be doing, because either you change your mind that it wasn't that cheap, or you should. What's the saying? You should either buy or sell, or in a sense that you're buying back your portfolio every day. Anyway, I hope you get something out of this. And it's like one thing again. I've never seen let's say a multi-year bull, so I'm not and every bull is obviously different. But I think it's worth considering. Okay, to summarize, I think we're still very early, especially in the junior space. I don't know how cheap Newmont, etc. is. I don't know where gold and silver is going to go. If I look at especially the gold price compared to where some gold juniors are trading, I see massive upside. I see some of the cheapest levels I've ever seen still. So that's a clear-cut long/buy signal for me, because that's the only metric that's my only strategy in a sense. If it's cheap, buy. If it's not cheap, sell, or unless you find something even cheaper. So that makes it easy for me. But I don't know, I've never been in a multi-year bull market. Again, my strategy is to be in the cheapest juniors I can find, or the juniors where I think can create the most value over X amounts of months or years, and just keep doing that at all times. Because even in poor market conditions, if you buy stuff cheap enough, they might not go down that much. If some of them create value, they might still go up, etc., etc. But I obviously have a lot of corrections along the way. So I could have, portfolio might be trending down for a half a year. That's not out of the question at all. But I don't take that as, what I'm doing is not working. No, because after that downtrend, let's say you can do also some value shuffle. Your portfolio is probably cheaper than it's been in the last year or something. And then when the revaluation happens, because the sentiment turns around a bit, you'll make a higher high, etc., etc. Just continue to do that. So that's how my portfolio behaves, basically like this. And that's probably how it's always gonna, because again, it's like stocks tends to overshoot and undershoot fair value. Anyway, yeah, thanks for listening. Maybe, if you have some questions, etc., maybe some topics that you're interested in or would like to hear about, post that in the comments, because I want, I want to touch on the stuff that matters the most to to people, and sometimes I miss stuff, and maybe I haven't, wasn't clear about some concepts, etc. But to wrap up, consider me biased. If I talked about any companies, assume I, own them. Some might be banner sponsors as well, so twice biased. But ending words: relax, keep your cool. Yes, sentiment is going up a lot now. Everybody's happy, etc. But that should not keep you from acting on your strategy. I mean, if I'm sticking to value, I'm sticking to value. Yes, I have some juniors which I don't really talk about too often. That it's not my highest conviction place, but I think they can do well, and especially since silver can go crazy. Uh, but I know that's one big part of it, and I have some micro cap juniors which, like, they're really long shots, some of them, and it's like I'm not gonna pound the table so somebody can sneeze at them so I can offload. That's why I don't typically tend to talk too much about them, because they are usually high risk, and some of them are really long shots. Then I have some, I mean, lowly priced companies that I think are absolutely legit. But yeah, so keep your cool. Again, assume there's going to be corrections, there's going to be long consolidations even in a bull market. So make sure that you already know what you're going to do in every situation that can come up. And specifically, you would want to know how, would want to have high conviction or know every single case well enough that if it goes down, if nothing has changed, that's just a bigger buy. If it goes down and you're starting to, oh, now I'm feeling really tempted to sell here because it feels like the next move is down after it's down 20%, then obviously you were not, especially not a value investor, you're just, momentum trading. Thanks for listening. Have a good day. Bye.